So today we'll be talking about analysis, making of analysis. Analysis is what we're doing today, because I noticed that most of you don't understand how to incorporate the lessons into analysis. And I made a PDF format on how to analyze and things to take note of while analyzing, of which I will send to you in the group. So in the PDF, I talked about the three important aspects you want to focus on while making analysis. The first one is where the market is coming from, where the market is going to. The second, and the third one is where the market is currently. The three of them work hand in hand, in the sense that if you don't have the picture of where it is coming from and you go on trading, the market can take you out in any place, because you don't have the current market, you don't have the past from your head. So you want to understand this past in order for you to be able to predict the tomorrow and react currently. That is why these three aspects is important in analysis. To understand the past, that is where it is coming from, to understand where it is going to, the future, and to be able to understand where it is currently, the now. So you want to be a reactive trader, to react in the now. But in order for you to react in the now, you need to understand where the market is coming from. That is going to give you like a map. Just like we know we have this Google map, we have the map. The map indicates where you are in your journey. That is what you want to do, and that is what analysis does. It helps you indicate where the market is in its journey, moving from point A to point B. So we want to start with Great Britain USD. Now, in the first thing I said, we have to look for what, where the market is coming from. Now, in where the market is coming from, there are two things I want you to know. We have the main time frame and we have the leading time frame. The leading time frame is the time frame for the higher time frame view. The higher market view is what you want to use of the leading time frame for. And the leading time frame is that time frame that has the highest break in the market structure region that the market is currently responding to. Now, in this scenario, that is what we want to look at for. Now, if you look at Great Britain USD right now, you will agree with me that the market has been making series of what? Lower lows. We're expecting the monthly time frame market structure in this level, another level here, another level here, another level here, another level around this point. We have another level around here, and we now have this final drop. So we want to know and understand that the market is what? Clearly bearish. Clearly bearish. Now, at this point, I'll be introducing the only tools we need, and that is the trend line. The market is clearly bearish rather. Now, I'm going to make use of what? The trend line to indicate the general overall trend. And that is what? Bearish. The market is bearish. Whenever you are trading, you want to have this at the back of your mind. The market is bearish. Now, we already know the overall market trend, which is bearish. Now, we want to look for what? The next thing is to look for the leading time frame. But since we cannot make use of the monthly, yearly, and forever, maybe century or decade time frame, we don't have those time frames. We want to make use of the one we have, and that is what? The daily and the monthly. Now, if you are to focus the background from this point to this particular stage, we will say the market is bearish. But if we want to limit our background focus to these areas, we are going to say the market just from here to this current market region. We'll say the market is still bearish, but it's currently doing what? Retracing. And since we want to know the current leading time frame within the daily and the monthly, to get the leading time frame, you only get it from the daily and the monthly as a swing trader. If you want to be a scalper or a day trader, you have to. A day trader will get it from the daily and the 1 hour. A scalper, we can get it from 5 minutes, 30 minutes, or 15 minutes, 1 hour, or 30 minutes, 4 hours. But a day trader from 1 hour and daily, then a week trader from 4 hours and weekly. But it is very, very important overall. We should make use of what? The daily and the monthly time frame. Now, I make use of the trend line to do what? Support my direction. So that I'll be able to have the direction of the market, not me, not putting the direction whenever I'm making my decisions. So we now want to picture this particular point, the last wave down. Now, if I picture this, I'm going to look for what? Remember what we are looking for? We're actually looking for the current highest time frame that has the what? A, B, and C confirmation. A, B, and C confirmation. This is what we are looking for. A close below the B. Now, remember what I told us in retracement. If you recall, I said, whatever started the trend, we also use that same word pattern to what? End the trend. So we want to see another A, B, C at this point in order for us to conclude that the market is what? Going back to bullish. So very quickly, these are the areas we are looking out for. So I'm going to come up here, focus here, daily time frame. We want to see the daily time frame from this point. Good. Now, this is it. The market formed the what? The daily time frame high from this point. Making use of this particular area as our market structure level. Now, very quickly, let me chip this in. If you notice, we have a market structure level here. Let me turn this color to blue. We have a market structure level here, but we are going to wait for a whole full time mixing all this trade before we get to this market structure level. In order for us not to miss this trade, you want to trade the internal market structure level. And what is the internal market structure level? This point. These are the internal market structure level. The internal market structure level is going to take you to what? The overall, the current market structure level. That is the target. But we're not talking about the internal market structure level right now. What we are talking about is the leading time frame. So what I'm going to do is this. I have noticed that this level at A is my A. This is my level A. And this is where we have a break below it. I come down to my monthly time frame to spot the candle that closes below my A level. And this is the candle. And the candle closes below it here. So automatically, this is my B. Now, since we are making use of the daily and the monthly time frame, we want to look for our opposition bar in the weekly time frame. And yes, we did have it. And this is the opposition bar here. This was the opposition bar region. That's particular point here. That is the opposition bar region. Are you seeing it? And once we add a close below it, we add a close below it, that's point. A close below B. Remember, this is our point B. We have a close below B. Automatically, we now know that the market is doing what? It's going to drop. The bias has been changed from this bullish market now to bearish by the close of this particular bar to give us what? C. To give us C. Now, in order for us to respect this trend, the market will keep on respecting the daily time frame market structure. Look at it. This is the market structure respected. This was the market structure region respected. This region was also respected. This region too respected. It will respect every daily market structure level until we now have a what? A counter. And following the market structure level of the daily time frame, do we have them? We have to check. Now, this is it. This is now the market structure from the bullish side on the daily. Okay, let's go to the daily rather. I was using the weekly time frame. From the daily. Now, price drops. Now, this is our market structure region. This point is our market structure region. Now, at the end of the month, let me clear at the end of the month, which is what? The monthly time frame. Do we have a close above this? Of course we do. And this is it. So this gives us our A level. This gives us our B level. And now our C from the weekly time frame is this point, C level. Your position bar and price close above it. Automatically, we now have a what? This is our A level, our B level, our C, price drops. Then automatically, we now have the close on the daily time frame. And we have the close. That is why, let me see if I can get a picture. All right, that is why we now have that was why we now have what? This market shooting upward. Now, automatically, since we now know where the market is coming from, and where is the market coming from, let me remove every line I put, leaving only the trend lines for the monthly time frame level. Good. Yeah, leaving just this trend line on the monthly time frame level. Already, we now know that what? We have our A, B, and C. We have our A, B, and C, and they all happen around here. Yeah. This was the A level. This was the B level. And this was the close above B. So price did what? Trend upward. So we now know that the first bullish movement we have here that brought about this fall has been countered by what? By this move. So we need another what? Another ABC to counter this particular move. We did have it here, a close below the daily. But if you notice at the end of the month here, there is no close at all. It is still clearly bullish. And that is why we are not bothered about this. And instead, our new market structure level is no longer this point again, but now this low, because we are now making use of this high. Now this low. So already we now know that the leading market structure we want to make use of right now is what? Is this one here. So we'll do what? We draw our trend line. Remember the trend line, like I said, is used for the market direction. You want to know the direction you are following. You want to know the market direction you are currently following in order for us not to be lost. So we now know that, okay, part time, the market is currently what? Bullish. It's currently what? Bullish. But overall, the higher time frame movement is what? Bearish. But for now, it is what? Bullish. So we want to know that since this is a retracement trade in a trending bearish market, we are looking for what? When the market is going to do what? Start again the bearish movement. But since the market is not going to start the bearish movement anytime soon, what we are looking for is what? The market to continue trending bullish. Why? Because at the end of this particular trade, it must be terminated by what? Another A, B, C. So instead of looking for where the market is going to reverse to and we now enter a sell or whatever, no, we want to flow with the market because we know where it is currently. We now know that it is what? A retracement bullish market currently, and we are only looking for what? An ABC in the daily time frame that is being confirmed by what? By the monthly time frame. So currently the market is what? Where the market is coming from is this point rather. And now that brings us to the next point, where the market is going to. We already know that the market is coming from this retracement angle, bullish movement, because the leading time frame is this ABC candle right here. So we want to know the what? The next candle, the next punch, which is what? Where it is going to. Now, where it is going to, we might decide to make use of, for example, the bullish moving average here, because that's what I use as a point of contact where market can fall from, or want to make use of this other block. Now, all these points, I want to make use of this area, back up. Now, all these points are area of interest. If you come down to the daily time frame, all these points are area of interest where the market can reverse from. Are you seeing them? They are all area of interest where the market can reverse from. But we are not interested in this area of interest. We are interested in what? Following the trend, which is now what? Bullish for the short time being, till we have another exhaustion signal. We have that ABC, a break in the market formation, in order to give us another what? The bearish continuation. So this is it. Now, what you want to do right now is what? We now want to do what? Pieces these things we are looking for, and that is what the next stage, knowing where the market is currently coming from. And how do we do that? Let's think. First of all, we have to do what? Remember, the trend line is for what? Knowing the direction. And looking at this particular trade, we know it is what? Bullish. The daily time frame and monthly time frame is what is controlling it. We want to still go back and do what? And follow the time frame sequence. Since this is daily, we want to follow what? The 1 hour next. We want to follow the time frame sequence because we already know. And what is the time frame sequence here? 1 hour. Now, in this 1 hour time frame, can you notice? We notice something that the market is currently at this point. The market is currently at this point. You can see I'm using my trend line. My own is just to form a channel. I'm not interested in if the trend line is perfect or strong or it touches 3 weeks. Please take note of this. But I still try to make sure it touches 3 weeks. But my own is to ensure that the trend line is strong. Now we now know that we are trading inside the zone. Let me turn this to blue. We now know that we are trading inside the what? Inside the bearish retracement zone. This is it. And we now know we want to now look for the what? The time frame. Since this is the 1 hour, and we know that in order for this market to change back to what? Bearish rather, we must have a break in the what? The daily time frame market structure, which is this point. So we need a close below 1.18442. So this is where the market will turn to bearish, a confirmation below this point. So we want to work in that range. And this is the 1 hour time frame. This is the 1 hour time frame level. Now, knowing that this is where the market is going to change the bias from, we already know that the market is following what? The 1 hour time frame. Again, the same thing we did there by looking for the main time frame. And the main time frame now is now the time frame with the what? The current leading what? ABC. And now we have it here. Price did all whatever they want to trend. And they did what? They drop. They drop. Now we want to look for that ABC again. And look at it. This is the particular point the market is interested in. This is where the market is currently. We have level here, A, at the end of the day. This is it. A, at the end of the day, which is this point. This was the end of the day. B. Now, this is where our B is. Now we are looking for what? C. The C will be from the 4 hour time frame. Are we getting it now? This is the C level here. This is the C level here. Yeah, that is the C level. Now, a close above this C is going to give us price going back up. And price did close above the C. Now, this is the C level. We have the close above the C. And price kept on following the what? The 1 hour time frame market structure. That's what we want to follow now. The 1 hour time frame market structure. Look at it. This was it. We have this I here, the market structure level, another I, 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 the market structure level. Here in 1 hour. We keep going. We stop there. Another high. Do we have another high here? Yes, we do. Another high. The market structure level. Now look at it. This is the current market structure level we are looking at. And of course, we do have a close here. But at the end of the day, let's see. Did we have the close? Look at it at the end of the day. Let me go back. Clear this. Apply my rectangle. At the end of the day, we have a market structure break here in the 1 hour time frame. Yeah. But at the end of the day, look at it. Can you see these are just weak? The market retrace back inside. They are just the weak. The market retrace back inside and continue the movement. And continue the movement. So automatically, we are still making you, we still know that the market is still bullish from the 1 hour time frame. We know that, okay, this is currently a fake out region and the market went back up. We are still following the 1 hour time frame market structure. Now, automatically, my market structure region is now here. This is my market structure region. I need price to completely break below 1.22620 for us to see a comfortable close. Remember what I talked about, the inner structure. But down to the daily time frame, the inner structure, the range. And that is what I want. But currently, we want to know what the market is currently doing. And what is the market currently doing? The market is currently in the 1 hour time frame region, actively trading with the 1 hour breaking market structure. And what? In a range. And what is that range? This top. Look at it, a range from this point to this point. Let me make it black. Oh, let's make it magnet and see it's beautiful. All right, price is currently in a range. Price is currently in a range. And it is a what? A daily range. Because it is 1 hour and what? Daily time frame that is holding it. Now, this is it. Can you see? A daily range, but overall, the market is still bullish. So we know the market is bullish. This is what the market is doing. The market is in the range. Now, in order to now, let me clear this, clear this. I want us to just have a picture of where the market is currently. Good. Now, we now know that the market is in a range. In a range. Now, in order for the market to go up, we need a close above this daily range, 1.244. Then the market will keep doing what? Going back upward. Now, in order for the market to change bias, we need a 1 hour close. We need a 1 hour ABC. This is it. We need a 1 hour A, B. Are you seeing it? We need a close here. This is A. This is A. And we need a close below this point to give us B. So the market have to go up and do what? Come down to give us a B. After forming the B, rather, it goes back up, give us another what? C. then we know that the market is ready to do what? Drop further. But outside that, the current market region, current area where market is trading is where? At this angle. And I want to do what? We want to be able to follow it. Now you can actually put your trend line again, because you now know the particular area where price is going to. You can put your trend line here. Why am I putting my trend line? To still know the direction. Because this is what is currently leading the market. If I want to come down to this point, I'm going to filter it. And how will I filter it? I will filter it by knowing the leading time frame again to follow. So this is how we want to do our analysis. This is how you want to do analysis. You want to know where the market is coming from, know where it is going, know where it is currently. Then you take your trade in respect to the ABC confirmation or a breakout confirmation. So this is what I expect you to do while making your analysis. Very neat and simple. You want to know where the market is coming from, going to, and where it is currently. Thank you.